Hello again and welcome. This is Robert Schein, Managing Director and Partner at Blanke Schein Wealth Management. Today is Tuesday, September 29th, 2020. We have a lot of headlines that are moving markets. Let's get right down to what really matters most as it relates to how we manage our clients' wealth and what you should pay attention to. So let's get right to it. Our first topic of the day, Congress has failed. Yes, you heard me correctly. It shouldn't be a shock. I've talked about this on a daily update. Apparently the House of Representatives right now is trying to form together some support in the House for a CARES 2.0 stimulus bill that could be, a couple of trillions of dollars out there. Republicans in the Congress are looking at, basically their fair share of what they, think is $1 trillion. Regardless, we had a great thing going with regards to the way the Federal Reserve and Congress worked together from March to May. And then they had the benefits for unemployment, for small businesses, and that all expired at the end of July 31st. President Trump did an executive order. Some states added some additional enhancement unemployment benefits. Regardless, all of that is basically in the system, working its way out and ultimately expiring. Why Congress has failed is I'll just really look at our hometown right now. This is from the Coachella Valley Chamber of Commerce, and it's a list right now of well over 35 plus restaurants and stores, ultimately livelihoods that have closed permanently, right? Small businesses, restaurants, service industry, retailers, they've closed permanently. This is here in Palm Desert, California, and all 9 respective cities across the Coachella Valley here. If this is happening here, this is happening across the United States. What does that mean? Ultimately, it means livelihoods are lost. These small businesses are closed and gone forever. Unfortunately, this is the tragedy of where the Congress needed to act to help these small businesses, especially in some sectors and industries that needed it most. Again, the service industry, the travel industry, all of the above. So I think it's important that we pay attention to this, because this means jobs, this means money in the economy. This means Congress has failed. Now, they're going to agree to disagree. They're going to pull their political sort of shenanigans. Ultimately, it's just tragic and frustrating that everything that they seem to do in Washington results in a political motivation. So this is real. This is tragic, and this is happening in our valley. I'm sure it's happening all across the United States. So we're going to be talking about this more and more as we get post the election. Hopefully that sort of alleviates and creates sort of an impetus to start moving along and providing stimulus and support and unemployment benefits to those who ultimately need it, and forget about this politics. Unfortunately, but Congress has failed, and that's ultimately the net take-home effect here. Our second headline: the third quarter season for earnings report has begun. Now, keep in mind, when I talk about my daily updates, I just talked about small businesses. Small businesses are the mom and pop shops, the restaurants in the local community that don't have access to public markets. The large companies, the S&P 500, the big Fortune 500 companies, they have access. I've talked about this in one of my YouTube updates early on, March, April, and May. Size matters. These companies that are large companies that are public and they're in the exchange, they have had an unfair advantage because Congress and policymakers across the United States said, you have to go to these big box stores, and these big box stores can stay open, but these small businesses have to shut. And ultimately, 6 months later, here's where we go. We got the list of businesses shutting every day, and the companies that are the big box retailers are winning, and they're winning big. Why? Because they have access to public markets, they get the loans, they can sell equity to keep their doors open. But more importantly, the market looks through this into 2021, 2022, and long into the future in terms of earnings. Those companies will survive, the large get larger, okay? So for an equity market portfolio manager, this is, I don't want to say it's easy, but it is sort of very predictable as this relates to, the big box retailers. The big get bigger, size matters as it relates to keeping the doors open. Markets see that. So let's talk about the third quarter earnings. We're seeing this play out right now. What moves markets, what we care about here at Blanke Schein Wealth Management as it relates to portfolio management is earnings. Okay, at the end of the day, if corporations can't earn or make money in any kind of environment, especially in the coronavirus environment, if you will, markets really care about the earnings. Let's see how the earnings are coming from just the 14 companies that have already reported. So we kicked it off. So far, we have 14 companies reported. 13 out of the 14 have beaten. expectations, but the average beat is 27% of those 13 that are reported. On the upside, a huge, like crushing number, well close to 30% on the upside, beating expectations on earnings of the 13 of the 14 that were reported. Historically speaking, usually companies beat by 3 to 4% on average. This is huge. Again, going back to the original story that I started with, size matters, the big get bigger. If you're a publicly traded company, you ultimately had policymakers and the government help you out and give you sort of the advantage to say, hey, you could stay open and everyone else has to shut their doors. And so that's what's happening. This is going to work its way into the real economy. Unemployment is going to continue to persistently be high over many, many, many years to come. Policymakers are going to have to act at some point in time. When they decide not to do their political shenanigans, they're going to have to get together and help those, because the unemployment rate is going to be super high. Corporations are going to benefit on earnings. We're seeing that play out because the payrolls or earnings are coming from lack of sort of employees. That's a huge contributor to cost for a corporation. So they're earning more. Consumers are spending money online. Consumers have money, as we know from the M2 money supply. It's trillions of dollars. And so let's continue to watch the third quarter earnings report. But out of the gate right away, it's playing the same narrative that we've been talking about for months to come. Our final topic today: your future self will thank you. You've heard this analogy or this saying as it relates to investing. It's not timing the market, it's time in the market, right? What does that ultimately mean? Ultimately, there was a study that I just read this morning, behavioral finance from Oxford University, which basically conducted a study of investors' behavior. And what they found was, if you were to look at your portfolio on any given calendar year and you check in daily, there's a high percentage or a high probability that in that calendar year, if you check it daily, that over 40+% of the time, so in this case, it was 41% of the time, your portfolio was down. So ultimately, from a behavioral finance study, that doesn't make you feel good. And ultimately, it really plays on sort of the human nature aspect to do something that you inherently shouldn't do and the timing of that. So we here in professional money management world at Blanke, Schein Wealth Management, we counsel and guide our clients as to a long-term view, a long-term approach. Why would that be? Because the same study also reported that if you look every 5 years, now we're suggesting that you only look at your portfolio every 5 years. In this study, though, very specifically, I want to show you the empirical evidence, what they found. Every 5 years, if you take a peek and you own some high quality, long-term, good quality companies, your portfolio is down only 12% in that period of time. If you take that same study and you take it, hey, listen, let me just take a look at every 20-year period of time over a course, and this study looked at this, your portfolio is down 0% of the time. So what that ultimately means is if you have a long-term view of the markets, and from a behavioral finance standpoint, right? Don't look at it every day and make those snap decisions. Marry it with a financial plan, your investment management, like we do here at Blanke Schein Wealth Management, have very specific goals, and ultimately have a long-term horizon. And if you were to take advantage of the discounting and the dislocation in the market that's happening today, right? I just went through the quarterly reports of earnings that are coming out, and they're crushing expectations. Equities right now are still at a huge discount depending upon what sector you're looking at. So there's huge opportunities right now that we here in the professional money management world are taking advantage of for our clients. Again, we take advantage of those high quality companies, great balance sheets, well managed, and you look at a long-term horizon that also pay you a cash flow while you wait on a 1, 3, 5, 10-year period of time. Your future self will ultimately thank you. And why we also know that that's a good strategy going forward is because we had $90 trillion of global liquidity that's not only here in the United States but around the world. So all the ultimately the investment the policymakers around the world have ultimately created this huge sort of kerosene and bastion of liquidity that's going to support equity prices long into the future. So you want to own real hard assets, you want to own real estate, you want to own equities, and you want to own sort of precious metals, because that's going to stay ahead of the inflation that's being created right now by all of the global central banks, by $90 trillion right now. So your future self will thank you. Take advantage of a lot of opportunities out there. And if you want to talk further and put some more money to work here at Blanke Schein Wealth Management, we're happy to do so. Tonight we have the first presidential debate. We also have our portfolio positioning. Whatever happens with regards to November 3rd. We have a position portfolio white paper. We encourage you to join us. And then tomorrow we have the election update 2.0. We have Stephanie Link, CNBC contributor, as well as HighTower Chief Investment Officer. She's going to join me tomorrow at 12 noon. Please tune in for our Zoom call, and we're going to rehash the debate as well as all the portfolio positioning that we should be thinking about as it relates to the upcoming election and well beyond. So thanks for watching today, and tune in tomorrow.